If you want to learn about the markets, you're at the right place. I've been trading in the live markets 25 years using technical analysis. I used to be with Rich Dad Poor Dad. Robert Kiyosaki is an award-winning stock mentor. Anyway, let's talk about the markets. We're going to first start off with the XLF. What is that? It's the ETF on the financials. This is a big one, guys. This is the biggest conglomerate of banks in an ETF that's out there on the NASDAQ. And what we're looking at is a monthly chart. The month doesn't end until Monday. Monday it rounds out July. Tuesday is the start of August. We have 1 day left in the markets, and XLF is in a major symmetrical triangle. If I go to a line chart, you're going to see this very, very clearly. Big symmetrical triangle. We're in the apex of the triangle. We're above these moving averages. Anytime you get within a symmetrical triangle and the fact that you're in the apex, in the tip of this, look for a big move. We don't know if it'll be up or down. We have clues. The clues are we above or below the moving averages? Right now we are above them. And did this triangle develop at the top of a leg or at the bottom of a leg? Well, at the top of the leg. So we have some things standing in favor of a bullish move to the upside. And why is this one so important? It's because what happened on the close of Friday. On Friday, we were above that trend line, up, but by day's end, we came back down. Okay, again, this is a monthly chart. This is July right now. So if you're looking at this, we have a major pullback that took place, putting us right here at resistance level. The reason that is important is because the markets are only as strong as the financials there to support them. So if the market's going to continue higher, we need the financial markets also supporting that movement to the upside. So if on Monday XLF goes lower, then the jury is still out whether or not the market can still continue this bullish run it has been in, okay? Listen to that a second time if you need to. Because if on Monday we close higher for the month, making us close above that trend line, because again, this is a monthly chart. Every bar is 1 month, July, June, May. So that's what we're looking at. If we can close higher, let's say XLF gets that 35.50 or higher, or somewhere up there. I definitely want to see it over this 35.30, 35.40, 35.50 mark. If that happens, it will have broken the symmetrical triangle. And if that happens, we should see more upside potential in financials. If that's the case, then the monthly chart on the spiders should rally higher. Do you see this red line coming across? If I go to a line chart, you can see I'm marking the highs. The highest close here is this red line coming across. You go here, we have more opportunity to the upside. We have higher highs, higher lows. We're above all the major moving averages, but getting pretty extended really on the month, but not too bad. The relative strength is kind of in the middle here. Relative strength is hovering around 64. That's not too bad. Okay, now if I go here to the diamonds, we broke last month out of the symmetrical triangle. We got the rise. We're heading higher. We're coming up to this resistance area, this red line. If you go to the Qs, we are nearing that red line. Also, you can see this. Can we blast through that red line, getting up to this upper trend line? 100%. The markets can, in fact, do that. This has been a nice tear to the upside. RSI, if you look here, RSI on the Qs around 68, 69. So it's up here in the relative strength area, but certainly not overbought. And if you looked at Russell's 2000 monthly chart last month, we broke out of this apex and we moved higher for July. So it's looking good with a lot of upside opportunity here to get to this red line. XLF, we just looked at that. It needs to crack over that to give the rest of the markets the chance to go higher. If you look at US dollar monthly chart, we were down. US dollar bled out, but then is trying to come back. But here's the problem. It's on the bearish side of this trend line. We have support coming up here. That support was broken. I go to a candlestick chart. You can see all these levels of support coming up, and then broken. US dollar monthly chart looks like that. Now, I'm going to go over here. We're going to take a quick peek at some other interesting charts. Okay, let's go to the weekly charts. We're going to start on the weekly charts on the spiders. The reason we're going to do this is, and I just got them on line charts right now, and is to show you that RSI is way up here in an area over 70, so we're starting to get overbought at this moment. It's had a nice symmetrical triangle, had a breakout, and a run to the upside. So it needs to take a breather, either a pullback or to start basing sideways. But the question is, if the banks continue higher, if the banks pop higher, then what we should see is the spiders also going higher and still running straight up, maybe getting to this line fairly soon. So in other words, the spider would be up here at the 475 level. And right now it's at 456. So it's a significant run to the upside on this weekly chart. How many weeks could it take to get there? Hard telling, but if the financials get strong here, look for the markets to stay rock solid. The NASDAQ, if you look at the NASDAQ, we had this falling wedge, resistance, boom, up, relative strength, we're over the 70 mark, guys. So oversold or overbought at this moment. But again, it could stay up here for a while and continue to march higher into these areas of resistance. And we're getting close to those on the weekly chart. Russell's 2000, just recently, a bar chart, you can see that last week we broke over that trend line. We got more continuation. However, if you zoom in here, we didn't make much of a higher high here. It's almost a tweezer top. So that's telling me that we're slowing down. Look at this high versus this high versus this high versus that high. Not overly exciting here. It looks like it's starting to pause. That pause, it's taking a little of a breather here now that popped over this resistance area. XLF, okay? XLF. So last week broke out of this trend line. But what's interesting is we get a spinning top, almost a shooting star reversal pattern after an extended run to the upside. That's a reversal pattern, guys. On the week, this is saying that we could go bearish. If that happens, if the week goes bearish, Monday could be bearish on the financials. If Monday is bearish on the financials, guys, the rest of the markets could start to retrace and start coming back down. Again, everything hinges on XLF. Everything hinges on the monthly chart on does Monday give us a bullish run to the upside, or does it come down? The weekly is saying we have a good chance of coming down. That's what the weekly is telling us right now. It's not overbought. Relative strength is fine. MACD, everything's looking fine right now. I just want to see this bearish candlestick reversal pattern not come into formation. I'd like to see this continue these higher highs and higher lows. US dollar on the weekly chart, if you look at this, we were down, bear flag, kind of a bear pennant. It broke down. It's trying to rally back, but it's rallying back right here to these resistance levels. We go to a line chart. You can see this down, bounce down, broke all these supports and rallied back to these areas of resistance and these moving averages that are resistance too. So US dollar is in trouble. The only thing that could save the US dollar is if we can break back above all this nasty resistance. And if the government were to do something to support the US dollar for it to get bullish here, that's going to play havoc on the markets. You're going to see stocks wanting to drift lower and commodities such as precious metals and others drift lower. So, but right now, if this heads down, if the US dollar drops like it technically should drop, if that happens, the rest of the markets won't have that headwind, and you could see the stocks start to drift higher. You could see commodities such as precious metals drifting higher. Okay, so those are the weekly charts. Quick look at gold on the weekly charts. If it breaks that red line right there, guys, we're going to be in trouble on gold. Okay, trouble on gold. Silver, we have this bearish divergence here on the MACD. And we're under some pressure at this moment, but as long as it stays in this uptrend with these upper trend lines, all is well. I just don't want to see it start breaking down here. Okay, that would be no good. All right, quick look here. I'm going to share something with you about the VIX, which is very interesting. Okay, but I'm going to do that here in just a moment. So here the spider daily chart, we're just up and away, but a big bearish divergence. We're in a rising wedge. It's looking like this thing at some point could start breaking down. Rising wedges are bearish. Bearish divergences say, yeah, things should start to get bearish, and give some of this back. If you go to the diamonds, we're up at a resistance point right there. You can see that trend line coming across. Resistance was August 22. Resistance December 22, and we're right there again. Resistance, right? Resistance. Nasdaq. Go to the Nasdaq. Has been on fire. Up and away. A rising wedge, which is more bearish than it is bullish. And then we have bearish divergences, so this thing could start breaking down at some point on the daily chart. US. This is the Russell's 2000. Triangle City here. See all these lines? We hit resistance here. Dropped. Broke resistance. Came up, broke resistance, pulled back, found support, hit resistance, hit resistance. It's almost like it's wanting to break out yet again. This is the Russell's 2000 daily chart, but we have a bearish divergence that could be problematic. This thing could easily pull back to these two trend lines right there, which is below these moving averages, and that could in fact happen. If you go to the financials, how are the financials doing? Well, they had a pretty good, I mean, this thing just stepped straight up and broke a trend line, and now on that trend line, we're finding support above that trend line. That again is bullish. If the daily stays above this trend line and breaks out here, because it's kind of a high base type of thing, if it can do that, the markets will continue this bullish run to the upside. MACD's heading down, but we're still above the 0 line. Relative strength has gotten down here to the 60 level. It'd be a good place to see it rally higher again. So US dollar on the daily chart, if you look at this, it broke major support. We rallied up, and now remember how we were saying this before, guys. We said that if the markets came down and broke down, look for this to rally back up into these moving averages, and that's precisely where we're at right now. So this would be a good point for this to start reversing back to the downside, because we have major resistance right here. So watch my previous videos to be able to see what I was saying back here on this drop and what this was supposed to do, and it has done that so far. Gold daily chart, if you look at this, down, up. We had a falling wedge breakout. Now we have a bull flag, which is more bullish than it is bearish. If you look here at silver, we had this symmetrical triangle breakout and a bull flag, more bullish than it is bearish. But now I want to get into the VIX, guys. The VIX right now at the time of this video is 1334. 13 is a very low number. The last time the markets have been this high is April of 2022. Okay, so that's been a hot minute since we have been this high in the markets. Also, it's been since 2020 January since the VIX has been down here at these lows. So it has been a long time since we have been down here at these lows. And that was just prior to the Corona crash drop in 2020. So the VIX that we're seeing here is in complacent zones. It's very low. So the outlook, a 30-day outlook, seems to be everything nice and calm. These things can get out of control fast. In these complacent zones, they can get these big pops, and they can be quick. So you have to watch out for these. So that's the long and short of this message. Now listen, it doesn't cost you anything to give me a thumbs up. It doesn't cost you anything. You just click like, give me a thumbs up. Can you do that for me? And I love the fact that you guys leave your comments. So the market's going up. If I were to wrap all this up to say the VIX is at a multi-year low. We are making recent new time highs, okay, in the markets, and the everything is still pointing to the upside. The only caveat is XLF daily or monthly chart. Can we break that upper trend line? So in other words, is Monday going to be bullish? I need the markets to remain bullish on the trajectory that it is right now. The financials have to be bullish on Monday. So that's what we're looking for. Now, I'll say this, anything can happen in the markets, and it always does, okay? So no one knows what's going to happen next in the markets. No one does. And what we do know is we have statistics in our favor. We have data in our favor. The data that we have and all this past information that we have helps us be able to guesstimate what might happen next. If you can stack the odds in your favor as a trader, that pays dividends going into the future. So that's the long and short of it. So I have been trading in live markets 25 years using technical analysis, and I trade a significant amount of money on a day-to-day basis in the markets today. That said, 3 days a week or 3 days a month, that's all we put into it, we will mentor a group of people online through Zoom. If you are interested in us training and teaching you the intricacies of stock trading using technical analysis, certainly consider reviewing some of our information about our mentorship program. It's comprehensive, it's well done, and it's something for the more sophisticated traders, meaning that you can start basic. You don't have to know anything about trading, get started with us. But we are teaching you the real mechanics of how to trade in the live markets to help stack the odds in your favor. Okay, fair enough. So there it is, guys. Appreciate all of you. Take care and have a great rest of your weekend. We'll see ya. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. There you have it. Now, get out of here.